Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Monday, November 14th, 7:01 a.m. as I'm starting the video. And as always, please run that player at 1.5x. Not a lot going on in the futures. Toggling red, but not markedly so. Pretty much flatlining. Did note that oil was down 1.5% and copper was down 2%. Not a lot going on the macro front. I'd like to focus this morning exclusively on the charts. Got a lot of catching up to do and give you a flavor for where we're at today and possibly into the mid part of the week. Starting off, as we always do, with the dollar. We've had a dramatic two-day move in the dollar driven off that weak CPI number coming in lower than expected and rates falling right through support and with a big follow-up move. Now, what I want to point out here is we're coming into the 200. You can see here in gold at 105.50 and a big level of lateral support, resistance, support. So this is a big level here. I doubt seriously that the dollar is just going to crash through the 200. So I think from that perspective, things may get a little bit tougher. I'd expect the dollar to come in here to the in this range of 105 to 105.50 and then do a healthy bit of consolidation, maybe carve out a flat bear flag or get a bounce and form, a more traditional bear flag. But this looks a lot like the first leg of a down, of a extended down move. Just think of that ABC, A, B, C type move. But we'll just have to see how it plays out. My main point this morning here on the dollar is don't expect this to just, come on down. I think you're going to get a lot of consolidation, and that will put the dampers somewhat on the tailwind from a falling dollar. TLT, we got the breakout on the daily of the downtrend line, and now we're hovering right in this 97.50 range. If you're long the TLT, I think you can stay long. Depending on your risk tolerance, you can stay long here, either against 97.50 or long against the top of the gap, and then try and get a move up to at least tag the declining 50 EMA here at 100.25, I guess is where it's at. I guess it's 100.5. But remember, if you were to put on your fibs from high to low on this move, even a 38% retracement level, just eyeballing it, is going to be way up in this area. So even if TLT continues on its downtrend, getting a 38% kickback rally is certainly within the realm of possibility. And if that were the case, being long here is still going to be a healthy trade if it indeed plays out. VIX has crashed along with the equities rocking, and lo and behold, we're right back here testing the top of the gap that goes from about 22.25 down into the mid 20s, looks like 20 and a half. So that would, another healthy push on equities would certainly, I would imagine, fill this gap, and then that technical event could be checked off. So right here at an important spot on the VIX. With all the turmoil in FTX and the crypto community, I'm actually surprised this hasn't gone further down. We have gotten some stability here in Bitcoin, but the overall posture is bearish. Why? You lost this massive level at 19,000 until it can actually, recover that. I would be leaning to the downside. Maybe not exactly right here, right now, but if you got a kickback rally up to 19,000, which is a typical move, right? Breakdown, back test, fail, then that would be a prime pivot point at 19,000. And notice below, price is below all the moving averages that have turned sharply down. Oil had a nice day Friday, up almost 3%, and we did recapture the 8 and actually we recaptured the 8, 20, and 50-day moving averages that are all sandwiched in here at 87.75. So I mean, you can be long oil if you want. I'm just staying long equities for now, even though this was very disappointing, this retrace from 97. We had a beautiful inverse head and shoulders we were setting up. I'm going to leave that in place for now. But we've got the 200 to contend with right here at 91.20, and then we've got 94. So more work to do on oil for sure. We caught the gold trade quite well on this breakout from 25.50, and now you can see we're right here at the 200. I think I sent out a note Friday. I think I did. If you caught this is a nice little area to focus on now for potentially rolling up your strikes and stops to mitigate any kind of pullback. We do have a gap in here that I haven't marked that will need to get filled at a certain point in time. And I would also say, if you're not in it, just focus on the 200. Don't be all piss and vinegar that you missed this move. Really, if you think about it, the 200 is the demarcation line between a bull and a bear market. If you're above the 200, things are becoming more bullish. And as long as you're pinned below the 200, by definition, you're in a downtrend. So all is not lost. If gold is going to do something, this is going to take out the 200 and proceed higher, not in a straight line, but the door is open here if price can get over the 200 right in this 28-25 area, and we've got a measured move coming out of this inverse head and shoulders up in the low 30 and a half range. So I don't think if you're long, stay long. If you're not long, be ready, and be ready to cut losses if you lose 27 and a half, and it looks like this gap is going to fill, and we can look for another entry. I've said it for the last couple days. I don't like the posture of the McClellan being so extended. I'll show you in the charts as we proceed this morning that we're approaching critical junctures, and I wouldn't be surprised if this wants to pull back. NASDAQ oscillator is not as extended, but certainly reaching that way. And I think that's just a product of the Qs in general have been lagging, both SPY and IWM. Moving on to SPY daily. I mean, I'm not going to say doesn't get any simpler than this, but the analysis is simple. Trading and making money off it, gets a little harder, as we know. But we're right here at the 200 EMA, and you can simply use that as your pivot. We've, come down, put in this double bottom. Now we're working up the right side of the W. We've got a gap overhead to fill, and the black line here is the simple 200 moving average. Some people, it's widely watched. That's why it's on there. I prefer the 200 EMA, but that's, splitting hairs. Important spot on the chart. If you can get above, then you can use that as definitely a long pivot for you swing and longer term traders, that you just get long north of the 200, and then that's your pivot. And if price continues to move higher, then the 200 will gently bend right along with it, and then you can stay long against the 200. Here on the 60-minute chart, I've got the 200 right here with price with a more or less a $5 gap to fill right above it. If things go green today, you can get long and then see if we can get a gap entry and get another push. And that scenario would line up real well with filling that VIX gap below. One more push, maybe fill this gap, fill the gap on the VIX, and then, things will be really overcooked on the oscillators at that point. Moving on to the Qs, we did on Friday, in my mind, take out a significant level. You can see right here at 285, support, reject, 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 and now we took it out. So I think 285 is your clear pivot, and you can stay long against that, and then look for, look for 295. I don't see a whole lot stopping price from achieving that level as long as 285 holds. Of course, you lose 285, then it's subject to rolling down for a back test of the 50 right here at 280. And, just to show the lagging effect, the 200 on the daily is all the way up here at 306, and in SPY we're right at it, and here we're way down. We're $20 lower on the Qs. 1 hour chart, you've got the comparable levels. We've got some resistance here at did I update that? No, see here, I hadn't updated it. So here, we took out that 285 level. We've got some resistance up here at 290. So you can use these levels here on the hourly chart if you choose to trade that actively. And you see where the overhead gaps lie. IWM, as I like to say, this is why I draw the lines. Look at that perfect touch, perfect gap fill of this gap on IWM. And you can see here the 200 simple and the 200 exponential averages are both acting as support here on the daily chart for price right at the bottom of the gap. So I think the pivot is pretty clear. Stay long against the 200 and the bottom of the gap. And if you lose it, then, if you're actively trading it, step out of your position here at 185, knowing that you got the 200s coming in right here, and see if you don't get this breakout at 189, and then that opens a path to 192 and potentially 196 on the high side. So you've got a real solid level of support here at 185 to shoot against on the long side. Meta, not a dramatic day on Friday, but still making progress in this massive gap. Now what I've done is sketch in a midpoint of the entire gap. That's usually a demarcation level, if you will. And note that the 20 EMA is coming in right here at 110. So a technical objective is to get above the midpoint of the gap here at 116 type area, and then notice you got the 50 coming in right at the top of the gap. That would be a nice technical type move to come up, touch the 50, and then probably have a pullback there, and then you got a big level at 136, where you had the COVID low and all this traffic along here, a lot of support and then a lot of resistance before it fell away. So now, depending on where you're at, you can either stay long against 110, buy a pullback to 110, or buy a breakout above the midpoint here at 116. Apple continues. Nice day on Friday, 2%. I don't know why my little chart here reverted back, but I think you can stay long against like 148.5 here. I wouldn't want to see that roll down. Then you'd possibly have an opening back down to 145.5. But I mean, this still looks good. I wanted to show you the daily chart here, where at 151 you've got actually 151.74, you've got the 200, and that may pose some significant resistance. But on the daily chart, you get above the 200, I would imagine a run up to 156, where you can see we've got support, resistance, large volume over price bar, resistance. So that'll be a really important level if and when price can get above the 200 here at 151.74. I would have that on your chart, move it over to your 60-minute chart if you're trading it, and know where that level is should price approach that level. Tesla continues to make some progress. I don't think anything really if you got this move, great. Congratulations. That was a nice trade off the floor. But now you can see I've got the fibs dropped in, and you can see that we're approaching a couple of different key levels. Number one, this 200 was support, so now that's resistance. You can see the resistance here, and you've got the 38% retracement level. So as it stands now, break down, revisit the scene of the crime at the 200. Your objective trade is to be short at 200 because of the resistance and because of the fib, and with a stop just above, counting on the breakdown back test failing and coming down. Now, if you get the breakout, that's a whole nother ball game, because then you got 107.50 and more or less 215 in the crosshairs for an extended rally. Microsoft shows you the power of these gaps. We got the impulsive move. I think this was Thursday. Got into the gap, held it, and then extended up here. I think your pivot today is 247, and you're simply looking for a gap fill up to 251. Notice rejections, and that would be a place to certainly go to the bank. If you had been, if you held your long over the weekend, you want to either take it off there or roll it up if you want to stay long. I want to show you the daily chart, and you can see how important this line is on Microsoft. Look at all these levels of support. You've got the highest volume over price bar on the chart. Support, and then that all turns into resistance. Resistance here. So odds on favorite that this technical event is checked off, filling the gap, but then there's a price reaction right here at 251 where I'd expect at least some type of a reaction. Also note where the 50 is down here at 240.60. If you got a gap fill and then a pullback into the 50, that would be an objective buy there. Have that A, B, C type move and possibly come up here to tag the downtrend line and the 200 up in the 260 range. Amazon, very much like Tesla, and I'll show you that in a second. Where we got the move on Thursday, broke out of this 98 level, and now we're making our way up to 102, 102.50, where you've got a big gap that goes up to 211. But when you look at the daily chart, remember we had been hyper focused on 102.50 because of all these lows that held, and then when it broke, it really let go. And so now we've done that same move of a breakdown and a back test. So, and we're right up against the 20 here that you can see. So I really think the big pivot level is 102.50 on Amazon. And if you get that breakout, if it can get above, then you want to get long there and look for a gap fill up to 111. Same thing on Google. We had a big, remember 96.5 was our big level. When that broke, we back tested it one time, actually twice, reject, and then big fall away, and now we're right back up to that level. So I think it's pretty clear on this chart that 96.50 is your pivot, and if it can break above and hold, then you've got a gap that starts at a big gap that starts at 98 and goes all the way up to 105. But if it starts to roll over, then I think it's a very objective short there, because you've come back to resistance that got rejected, and then your first target is 95, and then all the way back down here towards 93 and then 92. So important level. Netflix has gone back in moonshot mode, up 5.5% on Friday. Got that W pattern working, and really the levels have worked so well on this chart. Got back into the original bracket. What does that mean? Far side of the box is your de facto target. We had a level here at the midpoint at 270, took that out. So if you missed this one, your objective buy was 270, and then you had another chance to buy at 280, going back into the gap, and now you're back up towards the 200 here at 290. So I think today 290 is your pivot. You're looking for 300, 305 as first targets. If it can't do it and rolls over, your first support is back at 280. So these the lines that I have been working really well, and also they're being revalidated with more and more price action around those levels. SMH has also been a moonshot. We had the gap up on Thursday with a move up into this 208, 210 area. We moved into this $5 gap that filled, kept right on going, right up to 222.50-ish. I've got some targets above, but I will show you on the daily, again, right at the 200, which comes in on my chart at 222.93. Let's call it 223. I think you can use that as a solid pivot level. If it is able to take that out and hold it, then you can look for higher ground. And if you see a pullback into 217.50, I think that's also an objective buy. Why? Resistance, support, support, resistance, resistance, resistance. So this 217.50 is an important level to hold on any kind of a pullback, because you've got this big trading range acting as support there. If we move on to ARK, we've been getting a lot of horsepower out of these beaten down names on ARKF, right up to the midpoint of the box at 1675.17. Get a break above. I would expect a move up to the top of the box here at 1875. You've got a clear pivot there in ARKF. ARKG, actually same thing. Midpoint of the box, went up, came back. Right here at 36, you've got a beautiful pivot to work with there on ARKG. ARKK, right to the bottom of the box, you've got a very clear pivot at 40. And you can see, again, how these levels and lines work on the chart. Support, 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 support. Break of support. Resistance, 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 resistance. So the more reactions you have along a line, further validates it, further strengthens it, raises the level of importance of that level. So right here, a break above 40 would be significant. That would open the door to 43 and then 46 at the top of the box. ARKW, again, right at this important level at 49. Support, 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 resistance, resistance, resistance. You got the 50 here, and then you've got this 49 level right here on ARKW. If it can break above that, then you can get up here towards 52.50, 53 area as a first target. I want to run through some of these materials names. Copper. Now, I told you copper was down 2% today, so keep in mind there's a little gap here to fill. But what I would tell you, if you had gotten long right in here at 35, 35.50, and you haven't done anything with your position yet, that's fine. Notice the two large volume over price bars here. So, 38.25 is going to be your resistance level. You can see, there was a reach up on Friday and then a pullback. If you got above 38.25, I think that would be a nice place to roll up and reset your pivot, take some money to the bank. I wouldn't be surprised, if we do get above that level. There's going to be a hesitation soon because we're getting pretty far away from the 8-day here at 35. And, on this copper weakness, if you aren't in it and you got a pullback into 35, into these moving averages, I think you would want to get along right here at or around 35. You've got significant lows, a number of lows, support. We'll call that resistance. You can see here it had a little trouble at 35. So if you got a pullback into 35, I would hit that long if you're not in it. TECK, another copper name. There was a decent move on Friday, 2%. Reach up, pullback. You've got a level here at 36 I think you can use. But if you got a pullback into 34, I think that would be a good level to hit it. You got a large volume over price bar. You got a lot of support here. You got a lot of support here. Resistance. Ended up being resistance here and resistance here. So any kind of pullback in the 34, I think, would be a solid buy. You'll have to decide if you want two copper names. They're going to move together, FCX and TECK. You may want to just, stick with one, depending on how much exposure you want to get. I want to bring to your attention this lithium chart here, testing the highs. Probed it on Friday, pulled back. I think you want to set your alarm at 35 right here on lithium. If you get that breakout, there would certainly be a lot of running room. And although I didn't mark it in the chart, you got a big cup and handle. Here's the cup, and here's the handle, right? So that would project a massive move above, if we get a breakout above 35 and it holds, I think there would be a lot of running room. And you can see that momentum is just breaking positive, as well as RSI just breaking positive at this juncture. So certainly not stretched on the indicators, and right here at the top of the range. Refiners, 1%, but it's going in the right direction, walking up the 8-day. I'm still long in November. I'll have to check that expiration date. I think it may be a week from Friday. I'll have to take a look at that. I will let you know if I decide to do anything on VLO, but it still looks positive to me. Still looking for 142.5. And then moving on to Exxon, good day on Friday, 3%, right up here in the 114 range. Oil's down a little bit today, so we'll have to see what happens. But again, here, walking the 8-day right on up to line, carving out new highs. XOM is not going to be as volatile or dramatic as a Devon, as an Oxy, more of a stable name. It's going to move with oil, but you can certainly get more horsepower if you go down to the smaller names. And hey, if you want to just play XLE, ExxonMobil and Chevron are 44% of that index, plus you get all the other ones, so you can play it with an ETF as well. And the nice thing about the integrated names, both Chevron and Exxon, they have significant refiner components to their makeup. Whereas an Oxy or a Devon is just going to be, oil production. So you get a little diversity that way if that's something that you're looking for. So, little recap. We got a gap to fill on the VIX. TLT is still poised to move higher. The dollar is still has a little way to go technically to the downside, but the 200 and key support there is looming. I would expect a stabilization. And one of the things that keeps coming up in my mind is the extended nature of the NIMO up there above 60. That's cautionary. And what I would say about that is, don't get too far out over your skis. Keep that in the back of your mind, not as a reason to get short, but as a reason to keep your longs on a tight leash. And remember, we got a lot of names, and I just went through them, that are approaching key resistance, whether that be a technical level, the 200, whatever. And I don't think that price just waltzes through the 200. If the rally, if we're going to get a rally into the year end, I'd at least expect either a hesitation or a pullback on that first touch of the 200. You typically see that when price approaches, a super key moving average or a super key level on the charts. I think those are locations where you want to be rather defensive. If you've got embedded gains, make sure you go to the bank. If you want to stay long, that's fine. But just make sure that you've harvested the hard work and the gains that you've gotten, to that point on this nice rally. So let's wrap it up there. I also want to remind you guys, I've got a link not only on the emails, but on the YouTube channel, where you can make a donation to help support the channel. I can only assume if you're listening every day, you get some benefit out of it. Hopefully you're making a ton of money. And I would certainly encourage and appreciate any donations to the channel that you care to make. And one thing I've noticed on the donations, it typically are always the same people. So there's a lot of you out there that are, watching, but have never contributed. So I would encourage you to do that if you're getting benefit from the channel. So I'd appreciate that greatly. Let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.